Welcome back, YouTube. It is basically 1 in the morning right now, and I promised y'all I would come out with this video soon, and I'm finally doing it right now. This might not be the best time, but after this I'm gonna go to bed, get some good sleep. So, with all that being said, this video we're gonna go over some backtested trades that I took yesterday when I was backtesting, and just talk over them and talk about how I um, journal my trades and just my thought process and everything. So, yeah, I'm thirsty as hell. Whew. That water tasted delicious. With all that being said, hopefully y'all are locked in. Hopefully y'all get something out of this video and y'all can maybe take some notes on how to backtest like a professional, because I'm not a professional, obviously, but yeah, hopefully you guys get some knowledge out of this. So first, hold on, this is the setup that you guys will be having. Date/time, win or loss, your R gained, whether or not you took a partial, and where you took a partial. I'll go over all this stuff when I tell you guys about the trades that I take. And then finally, bias, entry, confluences, thought process. Everything you're thinking about, everything where your stop loss is, the draws for the day, what you were thinking, why you were bearish, why you were bullish, all of that good stuff. With all that being said, first trade. So as you can see, where is it? Boom, boom. Let me scroll back down. Hey, before we get started, actually, I'm doing this thing. Keep saying bro, damn. The start of 2023. I've already finished 2024 year. So what I did was I backtested, all of 2024, from start to absolute finish. Obviously, this isn't like every day, like there are some days where I skipped it just because of news, and this was like all of last year too of me backtesting. So like my strategy was different, the way I entered was different, so everything's not going to be to a T. So yeah, see, like in the month of May I only traded once. That's not going to happen. I just wasn't really experienced as well back then, and there were some things missing. My strategy was different. Like I said, all that stuff is different, but I have, oh, what the fuck, there's something missing there. But yeah, still backtested all of 2024 on FX Replay, and that was my win rate out of all of this stuff. Obviously, there would have been more trading days that I did miss, but like I said, I was less experienced in that back then, because this was like over a year ago when I started this. Yeah. And now we're on to 2023. I know I'm doing it backwards, but this is 2023 start. So we have first month, second month, third month, fourth month, fifth month, sixth month, seventh, eighth. I mean, this was true. Ninth month, dude. I suck with dates. Hold on. What is 9 as a date? I'm fucking stupid, dude. September. This is all updated, so like this is my new strategy, reflecting off of price action. So I did actually only trade one time that month. Price action was horrible, absolutely horrible. But we've been better so far. So my win rate here is gonna be a lot more what do I say, accurate. Yes, more accurate. And basically what I do is, if you are backtesting and let's say you lose your first trade, but like in any live trading session, you will enter more than one time, most likely, if it's not a revenge trade, or if it is a revenge trade. But we do not revenge trade on this channel, obviously. I would never do that, and I will never advise anyone here to do that. You enter with calm, patience, and the skills that you have learned. You enter with that stuff, not with fear of missing out or any of that or any of that bullshit. I was gonna sidetrack. I thought I heard something outside. Yeah. So basically, what I do is if I lose a trade and then win a trade and win everything back plus more, meaning I am profitable for that day, that is a win. And I don't put down my loss because overall I won that day. That day is mine. I won. It's mine. So that counts as a win. So yeah, that's how I'm doing my win rate. Obviously, it's gonna be different because I'm not counting my losses for some days because I won all of my money back plus more, meaning I am profitable. So yeah, that's how I'm doing this, and you guys can replicate this. And these are not small little explanations. These are detailed, thought out, like to where I can come back through this and look at all my trades and figure out my mistakes and therefore dominate the markets in live time. So with all that being said, first trade October. This was October, September, October, November. Boom. So we're in October. We're almost done with 2024 actually. I'll make a video when I finish, but I've been yapping too much. Yeah. October, first trade. So as you can see here, here's the trade. And then we go over here. Boom. First trade of October, the 5th at 10:09 a.m. was when the trade was placed. Obviously, it was a profitable trade. A 2.62 R initial gain. So like my risk to reward was a 2.62, and I gained 2.62 R because I didn't take partials. This was the full profit. No partials, and then boom. So then we go over here. I had a bullish bias today. Obviously, you guys can see it was a bullish trade. Because price came down and swept out London session lows before macro, and price was choppy, but there was relative equal session highs that I knew needed to be taken out. As you can see here, London session highs, and these are obviously the Asian session highs. So yeah, and then right here, as I explained in my trade entry journal, we came down, swept out London session. Price got choppy right here. I knew these highs needed to be taken out, relative equal highs. All that being said, so when macro opened up, on the 5-minute, a bullish fair value gap formed and retraced into, and then I scaled down to the 1-minute, and then the 5-minute had a break of structure to the upside. Then on the 1-minute, obviously I can't go back because this is a screenshot. Oh no, this is the 5-minute. Okay, because when the trade lasts too long, so these are all 5-minute candles. So this trade ended at like probably like 12 o'clock. So this is 2 hours worth of price action. So like on the 1-minute, it would just be like fucking huge, like all over the place. Make sure my camera, okay. So yeah. So this was a screenshot on the 5-minute, so we can still see this here. Boom. Oops. 5-minute fair value gap. Price comes down, retraces, and on the retrace candle, up down, we get a break of structure above that before we enter. And I don't know how you guys do this, but in all of the backtesting and all of the stuff that I've done and all the people that I've worked with in trading, what's it called? Candle wicks, they can wick up above a high or a low and not break above, and this high is still the break of structure high because we never broke. All we did was wick, and we never. This was a bullish candle. I remember this day because this was literally 2 days ago or yesterday. Yesterday was. You can wave your mouse over it and it'll tell you like up here, that it, like, if the candle is a bullish or bearish candle, even though it's like technically a 0-0. But this was a bullish candle, meaning it was up. These were both bullish candles, so there was no new high created. So if this was a bearish candle, we would have been up, down, and then we would have had a break structure up here on this candle. But as you'll see, we remain bullish. So these wicks don't mean anything. and then we break structure right there. So, oh yeah, and then as y'all can see, here's the 5-minute fair value gap. Boom, boom, come down into it. I wish we could see the 1 minute, but we can't. So I'm gonna go with what I wrote down. Where was I? And then the 5 minute had a break of structure to the upside. Then on the 1 minute, price was already in bullish order flow. Then a bullish fair value gap was made coming out of the 5-minute fair value gap, and price retraced into the 1 minute fair value gap, and I entered off a bullish candle close, and I spelled with wrong. With. So obviously we can't see the 1 minute, but you can zoom in a little bit, and y'all can see there was a 1 minute fair value gap in here. Obviously it did get filled, and I entered off a bullish candle close, meaning after we retraced into the fair value gap, a bullish candle was formed coming out of the fair value gap, and that's where I entered. I didn't enter off a break of structure. I didn't enter off of a order block, breaker block, any of that. As soon as we show bullish confirmation coming out of the fair value gap after 5-minute confirmation and liquidity sweep and all of that, all of this stuff combined, that's my go sign, and I'm good to enter. So I entered with a bullish candle close with my stop loss at the 5-minute low that swept out London session lows. As y'all can see, my stop loss, where's my mouse? At the low that swept out London session lows, boom, down here. That is my stop loss. Stop loss is completely safe here. I could have placed my stop loss. Now to think about it, this is why this is good to read all of what you were talking about and screenshot. I screenshot every single backtested. All of these trades are screenshotted. Oops. All of these trades are screenshotted on my desktop. What was that? What was I saying? Damn it, what was I saying? Yeah, so my stop loss was at this 5-minute low that was created that swept out London session lows. But this would have been fine too, keep putting my stop loss at this low. Technically it's not a 5-minute low, which is why it would have been riskier, but after filling this 5-minute fair value gap, price should not be coming down under this it's a 1 minute low, because as you can see there's no down candle here on the 5-minute making this a low. So that's why it would have been riskier, and why I probably wouldn't have done it, because it is still a 1 minute low, but we did fill a 5-minute fair value gap with this candle wick. So this also would have been, this would, if I saw this and someone sent it in to me, I would have been okay with that. But this is just a lot safer. Obviously you would risk less because you have a bigger stop loss size, but this is the stop loss placement here. I would be perfectly fine with too. It's just a little riskier. So if this was a 5-minute low and a 5-minute fair value gap, that would be perfect. I'm putting my stop loss right there, because price, after filling a confluence and showing all this confirmation and all that, price, there's no way in hell, unless price is just acting up that day, that price should ever come back down and doesn't stop you out. This is why you guys have to do this, go through all of this stuff to feel this confident in the trades that you place. This is why this is why I'm making this video for y'all to see. Bullish candle close with my stop loss at the 5-minute low that swept out London session lows, and I just had, I be typing fast as fuck when I write these, and I just had one take profit because the two highs were close together, so it was a good trade and good idea. So obviously these highs are very close together. There's no reason to take a partial here and then take my final TP there. Easy, simple, boom. And the good idea being a very textbook trade. What I mean by textbook trade is liquidity sweep, break of structure, fair value retracement, 1 minute confirmation. That's literally it. After everything gets checked off, boom, 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 textbook trade. Wow, you enter every time that everything gets hit. It's not a FOMO trade, not a revenge trade. You enter whenever your shit gets hit. It's that simple. Boom, boom, boom. Hold on. Very textbook, and just good to note that when the 1 hour is showing bearishing shit. Showing bears coming into the day, but then sweeps out major lows like session lows, then the market will disrespect any confluences pushing bearish. Holy fuck, bro! I can't type. Whether it's on the 5 minute or 1 hour, because the liquidity has already been swept, and the market will push to take out other draws of on liquidity. But also make sure that they are. Oh, bro, I'm fucking dyslexic. Holy shit. Make sure that there are good draws to be taken, because the market has to be drawn to these draws in order to enter a trade and win. So good textbook trade with liquidity sweep and 5 minute confluences down to the 1 minute. Just like I just said. What I mean by all this blabbering and bullshit, because I can't read. After we come down and sweep out London session lows, there's like I said, there's no reason. Yeah, there's no reason for prices to come back down there, and there's no Oh my god, bro, I'm tripping. Holy shit. There's no reason for price to come back down here. Why? We showed that liquidity. Where's the other liquidity? Up here. What are the good, most important draws that need to be taken out today? Relative equals session highs. It's exactly where the market wants to go, and that's where we went. Why? Because we swept out low session lows. There's no lows to be taken out here. This is a fuck. What do you call it, bro? They're in my notes. I guess you could call it a protected low, like I said, to place your stop loss, because after sweeping out liquidity, price is going to reverse. Most likely, it's going to reverse. This is why I wait for confirmation. For confirmation through confluences and stuff like that. So, yeah, the good draws up here, relative equal session highs, and then this protected low was swept out. One of the lows, which made the protected low, meaning, bullish bias today. That's it, fellas, right there. That's the first trade down. Hopefully you guys understood that. If not, it's time to grow up, or maybe I'm just a bad explainer. Next trade, swing this bad boy over there. Next trade, boom, another banger, another dub. You know how we do. Okay. This was October 6th, the day right after, at 9:59 a.m. Obviously a win. 1.8 risk to reward gain, but initial was a 2.6 R. Now this is why we write down our initial and then our take home, our gain, because whenever you take partials, it cuts into your profits. So partial at 1.01 for 50%, and then final TP at 2.6 R for the rest of the 50% of your profits. Partial here, partial there, partial at 1.01, and then partial at 2.6 up here. So hopefully that's very self-explanatory. I'm gonna do all 4 of these. Let me make sure how much time I've been recording for. 18 minutes already. Well, hopefully you guys are binge watching this and taking notes. Okay, so obviously bullish bias today, because just like the day before, like I'm saying, you can relate these days because this was the day before. The market came down during London session. Oh yeah, wait, hold on. And what I said about when the 1 hour, like higher time frames, when they start off bearish or bullish, shit. That's what that 1 hour trading is coming there. So whenever we have candles pushing up, more than likely that's leaving session lows and maybe 1 hour lows if the day allows that to then be taken out, swept out by one, usually our hourly candle, because we are trying to catch a 1 hour move essentially in a 1 hour candle. So whenever we start off very bullish in a day or very bearish, not very, but bullish or bearish, more than likely that's leaving all of these lows and all of these highs to be taken out. So that's a good example of a confluence that can play into your bias. It's not really a confluence, but it is a skill that you should have under your belt. all these all this time spent studying trading charts and candlesticks, you start to notice stuff like this. So that's another thing. Back to this trade. Um, yeah, came down during London session and swept out Asia session. You can't see it, but the market came down during London session. So Asia session lows were swept out, and left both session highs available, but they were not relatively equal. So I had to take a partial, as y'all saw and as I explained before. But after sweeping out Asian session lows during London session, the market reacted and was bullish. So after we swept out Asian session lows during London session, we just continued this uptrend. We got a higher. So this is the 1 minute. So as y'all see, we have a dip down. This is a 5 minute retrace. I don't think it was into any confluences because I would have mentioned that. But when we have a retrace before macro, and we already swept out the draws down here. There's no draws for us to sweep out. That gives me the green light, and we opened up macro right here, right at close to the draws. You could have entered down here, but this would have been a very aggressive entry because this is on the 1 minute, and I waited for 5 minute confluence. I don't always wait for 5 minute confluences, but I did in this trade, obviously. So, wait, let's see. The session is swept out. Partial. So I take a partial, but after sweeping Asia session lows during London session, the market reacted and was bullish. Then before the macro, the market was retracing down, like I just said, to fill confluences to then push higher. So when macro opened, the market had already made a high time frame retrace, higher time frame, not high time frame, a higher time frame than the 1 minute retrace, into a, this too, into a 1 hour order block and a 15 minute equilibrium. So with this retrace, I guess it was higher time frame than I thought. Like I said, these trades were taken yesterday, so I don't really remember them, so I reread them right here with you guys. We filled 15 minute equilibrium and tapped into a 1 hour order block. So I mean, obviously this is just major bullish signs for me to enter a trade. So major conferences were hit when macro opened, making me bullish until the session highs were taken. So then on the 5 minute, there actually wasn't anything but a break of structure to the downside, but then this was due to the high time frame retrace. So like whenever we get a break of structure, let's say on the 1 minute, that is most likely a 5 minute retrace into a confluence. So on the 5 minute, it'd be like a 15 minute or a 1 hour retrace into a confluence. So whenever we get break of structures down, this is likely to fill confluences on higher time frame, on higher time frames, or to take out lows, obviously, in case we're bearish or bullish. So then on the 5 minute, there actually wasn't anything but a break of structure to the downside, but this was due to the high time frame retrace. So I knew the market would want to remain bullish and would soon break structure to the upside. So I scaled down to the 1 minute, and then the 5 minute had a break of structure to the upside, like I said it would. Then right after the break of structure to the upside, a bullish fair value gap was formed, and price retraced down into it and filled the gap, while also taking out 1 minute equilibrium. And I entered off the bullish candle close with my stop loss at a 1 minute low under the fair value gap that I entered off of. It was a low retraced into a bullish. I'll show you all this. It was a low retrace into a bullish fair value gap under the one I entered from, giving me a protected stop loss and a good risk to reward. So this was another great textbook liquidity sweep trade for the markets to turn around and take out the other liquidity and good draws. Like I've mentioned before, this stuff works, fellas. You just have to apply it. But yeah. So when I said I placed my stop loss at the low, so we have a boom, fair value gap, retraced into here, boom, up, fair value gap, retrace, down, right? Right here, the 0.5, this is the Fibonacci extension, boom, up to that, this low to that high. We retrace down, fill 1 minute equilibrium, enter off the bullish candle close, stop loss right here above this fair value gap, under the fair value gap that I entered off of, like I explained. So yeah, we get a breakup structure to the downside on the 5 minute at some point through here when we retrace into the 1 hour order block. I don't think we hit the breaker block, but we hit the 1 hour order block, and we had 15 minute equilibrium off this push down. We did break structure on the 5 minute to the downside. As you'll see here, we come right back up. Boom, we break structure off this candle on the 5 minute. This is the 1 minute, but on the 5 minute time frame, we break structure up. Then we get the 1 minute retrace, 1 minute equilibrium filled, and the draws right here. This is free money, guys. Free money right here. So, boom. Obviously, never be too confident in any trade, and don't over risk. But I'm just saying, confidence is key when entering trades. So it's good to have it. It's essential to have it, actually. Boom, and there's that trade explained. This, I know what y'all are thinking. This looks like, what the fuck is going on here? Okay, and no. So, no, this was not a win. Obviously, look how close we got. And I zoomed all the way in, and I was like, damn. Yeah, I just started, some of this will happen. I'm convinced that this was a FX replay error, and I'll explain that in a second why I think that. Because if you guys have backtested on FX replay, you guys will know. Sometimes there should be bugging. There should be adding like new week opening gaps, new day opening gaps that aren't real, and price will just not react to them. So, this is why I think this might be a what's it called? How do you say it? A mistake by them. But hold on. Yeah, and if you guys are wondering, I don't really care about, I don't track how much I make. I just track whether win or loss or whatever, because when I do enter in real time, I know my lot sizes and all that. So yeah, I just enter with whatever that tells me, 15, or like these are like 25, 69, like it's whatever. You can enter with whatever, because I don't really track that, because I know what I'm going to enter with in real time. But October 9th, 2023 at 10:31, we took a loss. Losses are normal in trading. Take it and run with it and learn from them. We lost 1 R, so whenever you lose a trade or gain, you're just losing 1 R. That you lost 1 R for the day. You lose 2 trades, you lost 2 R. But the initial of my trade was 2.06 with no partials. So if I would have won this trade, I would have gained 2.06 R. But obviously, we lost. Yeah, so I'll explain this right now. Bearish buys today, obviously, because a huge new week opening gap was present. So this could also be a reason. This red line was the new week opening gap that had not been filled up here. Was present on both ES and NQ, and but on ES, price has already entered that area and filled it, creating a high time from SMT with London session highs. So NQ had not swept the swept the high or filled the new week opening gap. So I was bearish on NQ because whenever we fill a new week opening gap on one index and not the other, that is an SMT. And we also didn't sweep out London session highs on NQ, and what we did on ES, that's another SMT. Technically, we just combine that to a fucking Mega Evo SMT. So, I was bearish as fuck. So, NQ had not swept the high or filled the new week opening gap, so I was bearish on NQ. Then on the 5 minute, a breakup structure to the downside and a bearish fair value gap formed. And price came back up and filled the 5 minute fair value gap. So I scaled down to the 1 minute, and technically the 5 minute fair value gap was inversed. All of these wicks shooting up. Yeah, right here. So technically we did inverse this fair value gap, but just because the fair value gap doesn't hold doesn't necessarily mean that your whole bias is switched or changed. And oh, my computer's about to die. Oh, fuck. But yeah, just because one confluence is disrespected, like this bearish fair value gap right here on the 5 minute, does not mean that your whole bias has changed and that this shit's not gonna work. Because as y'all see here, still entered and still, you know, got fucked, obviously. And we can see it right. My God, ladies and gentlemen, it doesn't get much worse than this. This is literally like half a fucking millisecond fucking dick water balls, bro. When this happened, bro, I was tripping, but it's okay. So like this is gonna happen, whether it's on FX replay or if it's actually just what price was doing that day. Where were we? Yeah, so the 5 minute fair value gap was technically inverse, but price was leaving huge wicks on the 5 minute, showing a bearish order flow was still present. So then on the 1 minute, a bearish SMT was made at 2 1 minute highs. Then following that, there was a breakup structure on the 1 minute. Yeah, I can't show the 1 minute, but I'm explaining the 1 minute confluences that I used. A breakup structure to the downside on the 1 minute, then a bearish 1 minute fair value gap formed, which price filled, and I entered off the bearish candle close with my stop loss at the high that had the 1 minute bearish SMT, and my target was London session lows, and price was choppy, then dumped down to the draw. So yeah, in my opinion, this draw wasn't really as juicy. If we had like relative equal lows with like a 1 hour low or Asia session low, Asia session lows today were like all the way like 10 fucking light years away from like London session lows. So that was whenever that happens, I just cap it at the first draw, because there's no point in holding that, because you get to a point in trading where you know where certain things are possible in a day or when they're not. That day, Asian session lows were not achievable. So yeah. So I ended off the bearish candle close with my stop loss at the high that had the 1 minute bearish SMT. So as y'all see here, the SMT was made right there. So boom, boom, and then ES would have been boom, boom, up, down, but NQ is down, up, boom. And then we get the 1 minute fair value gap retrace in here, and the breakup structure on the 1 minute. The breakup structure on the 1 minute is that line, the second line right here, and then I guess I didn't mark out the fair value gap retrace on the 1 minute, because I would have seen the little box, but it's not there. But just so you know, that is what happened. Boom. We stop loss at the 1 minute bearish SMT high, and then my target was London session lows, and price was choppy, then dumped down to the draw. To the draw, and what happened next is something that I know almost will never happen again, but price got one tick away, like I said, from the draw, then reversed up and stopped me out for a loss. And there was no SMT on NQ or ES at these lows, or any lows for that matter. So no lows were taken out, no SMT was made, no nothing. So this was very weird. This was a very weird occurrence, but this is, you know, trading, like I said. And I will take this trade setup a million times over again and again. And this happening is very rare, and price doing that, price doing what it wants, and it's just price doing what it wants. But it could be a problem with backtesting, with the backtesting site. Not to make excuses, but with no SMT being made or anything, it's very rare for price to ever do something like this. But we just have to assume it's what price you wanted to do, and move on, because stuff like this could happen in live trading as well. To stay prepared. Stay prepared, but still a very good setup. So even on your losses, what's the point of entering a trade when you're not confident about the trade hit, like banking? I mean, like, you have to be so confident in your losses. Like I said, I will take that trade setup a million times over again. It made complete sense in my head. It still makes sense to me now. That little one takeaway mishap, that's almost never, ever gonna happen. Never. I just got fucking wrecked right there, as you saw. But you guys have to be so confident in your losses that you take. Because, I mean, at the end of the day, at some point in time, before you took that trade, you were like, oh my gosh, this is going to hit. You were confident in yourself, in your trade idea. So when it loses, you come with that same fucking mindset. I will take that trade again and again and again. And, if it doesn't hit, then you need to fucking fix your strategy and get better at trading and backtest more. Because that's on fucking you. But me, knowing my strategy, knowing my skills, I will take the trade again and again and again. But I'm not going to sit here and blame it on FX replay. But as you'll see, we came back up, took out London session highs, and then in 2 fucking bearish candles came back down and took out the draw. This is death. This is fucking death right there. But it's okay. And here we are. Ladies with gentle hands. How long have we been going for? This isn't bad, actually. Oh, let me fix my damn hair. What time is it now? 1:35 in the morning. And we are now finally on to our last trade. This was a nice little, quick little trade. So, October 12th, 2023 at 10:50. Normally, on live trading, I probably will never, stay on the charts till 10:50. But with backtesting, it's a lot easier because you just get moved through the candles. Obviously, we took a win. So with the stuff I just showed you, I have a 75% win rate with just the 4 trades I just showed y'all. Obviously, my win rate is not 75%. It's gonna be different because I've taken a lot more trades than just 4, as y'all can see. So it was a 2.47 R gain, and initial was 2.47 with no partials, baby girl. Baby girl, this is what I fucking do. This is what I do. My eyes are going bananas right now. I can't fucking burn. Ooh. But yeah. So starting off, bearish buys today, because London session lows was very relatively equal with a 1 hour low, and Asian session lows were available, but they were unattainable for that day. So just like last day, fucking Asian session lows were way deep down in the dirt. This was London session lows, and this was the 1 hour low. Actually, no, this was the 1 hour low, the first one, and the second draw was London session lows. As you can see, they are very relatively equal, and for draws like this, I will count this as one draw because they are so close together. One candlestick can easily just take both these draws out. Because why would the market want to take out one draw when it can take out 2 for the price of 1? Let's think about this logically, guys. So they were unattainable for that day, being very far away, but relatively equal lows were close to price when macro opened, and along with that, a high time from SMT at London session highs was formed when macro opened, solidifying my bearish buys. So I waited for confirmation because there is no reason for price to push higher. There was no reason for price to push higher. Why? Because there was an SMT at London session highs. When we have SMTs at session highs, you almost always will be always are trading away from that SMT. It's a high time frame SMT, first of all. Second of all, it's in fucking SMT. Third of all, session highs were swept. You trade away from liquidity sweeps down to liquidity that has not been swept. That's how we do this here. solidifying my bearish bias. So wait for confirmation. No reason for price to push higher, obviously, like I said. So then a 5-minute break of structure to the downside formed. Then I scaled down to the 1 minute, and the same candle that caused the 5-minute break of structure to the downside caused the 1-minute break of structure. So as you'll see here, we're on the 1-minute time frame. We get down, up. So like I was saying before, we have down, up here. So technically, people would say that this is the break of structure that needs to happen down here, but we get another low high being made. So now this is the new break of structure point. Where if price break structure down there, then that is the point where we break structure towards. So yeah. So as you'll see here, this one candle broke structure on the 1 minute, and then this also happened to be the last minute of a 5-minute candle closing that broke structure on the 5-minute too. So then, hold on. Boom, boom, boom. So higher. So then on the 5-minute, the break of structure formed. Then I scaled down to the 1 minute, and the same candle that caused the 5-minute break of structure to the downside caused the 1 minute break of structure to the downside, which then made a 1-minute bearish fair value gap, which price retraced into. Then it entered off the bearish candle close. Boom, boom. We have a what's it called? Bearish fair value gap on the 1 minute. Boom, we wake up into it. Boom, we close down here. That's like screaming, hey, we've hit everything I need to hit, and we're gonna enter. And my stop loss. Can close with my stop loss at the 5-minute high that made the high time frame SMT. So stop loss up here at the 5-minute high, and this is the high that made the SMT that did not sweep out London session highs. All the confluences were hit on the 5-minute, 1 minute SMT at London session highs. Easy textbook trade. Obviously, I'll go over this in a second, why price action is like this, but so this was a very good textbook trade. Once again, like I've said a bunch of times, I only take textbook trades because I'm never gonna take a trade where I'm iffy on, because then you have added emotions into your trading, and it's technically just a FOMO trade. You're FOMO into, it looks okay, I'll join, I'll enter this trade just because it looks alright. I don't want to miss the rush of winning a trade. So boom, boom. So the trade was a very textbook trade, and clear bias today, and would, my fucking gosh, and I would take this trade, take this trade a million times over, but obviously the news candle was the thing that took the profit. So I still need to be careful trading when high impact news is like that is present. As you'll see, this is not normal price action in a day-to-day trading. I knew where price wanted to go, and I knew at some point we would reach that. I never thought we would get this close to my stop loss, but as you can see, price action is absolute dog shit today. The only problem with this day is my news calendar was not working. It wouldn't pop up when I clicked it, so I probably just need to restart my FX replay, but I didn't want to restart and have to reopen everything and shit, so I just traded without looking at the news. Obviously, do not do that. This is just on FX replay. Obviously, God, I'm talking weird with the gum in my mouth. Obviously, do not do that, because that was just a one-time thing. So, and as you'll see, like I said, the only reason I won really here was because the news candle took my profit. In one fat ass candle, we came all the way down and took out, my full TP. Obviously, when you're live trading, you will always be able to look at the news on Forex Factory, or if you have Go Moon, any other news factory articles that you can look at the news from. So on FX replay, my shit was just bugging out. I'm not sure what news this was. If I had to guess, it would have to be some someone Powell testifying or some speech, or definitely red folder news for sure. I can guarantee you guys that. But definitely do not trade on high impact news like this where price action is like this. But like I said, I knew where price wanted to go, wanted to push, and my stop loss was completely safe up here. So with that being said, this was the final trade. Took a win because we knew where price wanted to go, and yeah, because with trading and whenever you trade for this long, you're gonna have trades, wins, losses, where it comes with being lucky. I mean, like I explained that last trade. Oh, that okay. This is my actual FX replay. This is my last trade I took the other day. But like I said, you guys are going to get lucky and unlucky, with a big emphasis on this trade. Every now and then, because that's just the way life is, guys. So you're not always gonna let me split this back. You're not always going to win big or lose big. Hopefully you don't lose big, but you're not always gonna be perfect, and that's okay, because you're gonna have tricks of luck. But it's all about you being able to perform long term with the skills that you have learned trading and backtesting. But obviously luck is involved. You just have to be at the right place, right time, and you still have to know what you're doing. Obviously, because trading is a very high stakes thing to get into. So I loved making this video. Hopefully you guys get a bunch of knowledge out of this. And one last, yeah, so these were the 4 trades that I just showed y'all. If y'all wanted to like, oops. It was like from this to here. But yeah, y'all go back, take notes, rewatch that. Any questions or comments you'll have about any of this shit, let me know down below, because I will answer your questions, and if there are enough questions, I'll make another YouTube video about it, answering your questions. Let me know how that sounds, guys. That's gonna be it for your boy. It's time for me to hit the hay and go to bed. So love making this video. Hopefully y'all liked it too. Love every single one of you guys. Let's keep up with the support, and let's keep growing this channel. So peace out, boys and girls. Love y'all.